All right. So again, this today's session will mostly be about intraday trading, day trading, scalping, price action, things of those sorts, just to help you not only be patient, but taking action when those opportunities do come and being able to execute properly. So um, here at the top of my screen here, the top chart, if you see this blue looking profile, this is a volume profile. Basically, it gives you an idea of where buyers and sellers are, where there's a lot of volume at, and where you can expect, um, some activity to happen, whether it be in buying or selling. The market is a two-way mechanism. Every time someone's selling, someone's buying, and there's a battle between the buyers and sellers every day. So understanding that, you know, us as the smaller traders, I should say, we're not the ones really moving this market. So we have to follow what the larger market is telling us, and then we make our money within that. So, when we see a lot of price action throughout the day, that's how we want to think. We want to think about, okay, what is this telling me? Who's in control? Is it the bears, aka the sellers, or is it the bulls and the buyers? That's the battle every day. So when you come into the market, you want to just ride the wave with, the winner of that battle. So with volume profile, it gives you an idea of where there could be some prior resistance, where there could be some support, where there's sellers or where there's buyers. So I'm gonna zoom in here on last Friday's session. Let's see if we can zoom out a little bit. All right, so I don't like the screen being so big. 1 second. All right. So don't worry about what's down here at this point. We're just gonna focus on this top chart, and then we'll go through these other two afterwards. All right. So this is all Friday. Got the gap down overnight, right? Um, which was kind of expected with Thursday's action. So if I zoom out here, this is Thursday's action, right? We're pretty much moving up, up, up throughout the day. Not really meeting much resistance, kind of just trending up. However, Feds were speaking, so as always, we have to be cautious when any of those type of events are occurring because they know certain keywords and things to say to get a reaction out of the market. And that's what we saw happen here. I think Fed Bullard was on, and he was talking about the possibility of course, another 50 base point rate hike. And the market didn't like that, and we trended down pretty much to lows of that day. All that happened in the pretty much last hour and a half of the market session. So with that, let's see. Let me make sure. Okay. So with that, you can see that that was a bearish close, right? Bulls had momentum all day, then they lost it in the last hour or so. So when you get type of moves like that with a lot of sell pressure, especially at the end of the day like that, that can kind of give you a understanding of what may come overnight. And overnight, the Bears did sell this back down here to the 404 level on SPY. So after that gap down, anytime you come into the market the next day, you want to have your plan. I know I do. I try to plan or have my plan set by at least 8:30, 9 a.m. Eastern. between those times. It gives me an idea of, what we can do that day in the market, just because I use data from the previous day. I may use some data from the overnight session in futures. And I take all that into account on how the market may play out the next day. So anytime we get a gap down, I have a rule that I don't look to short the gap down. Ideally, I would have loved for the gap to get filled and then I enter a short if I was looking to enter a short position, put position or something of that sort. But on gap downs, I really don't like to just all out look for a short. Now, there was a short opportunity here where we did sell off from 40, what was the high here? 406.81. It's pretty much a low of 404.76. But I knew we were very close to the support area of 404 and SPY, which wouldn't be easy to break through. And when you get that close to a support level, I'm not looking to be short, right? Because when you get down to support levels, what are you expecting? You're expecting buyers to step up, right? So if I'm expecting buyers to step up soon, and I'm maybe catching the short here, and I didn't catch it here, right? Maybe I only caught it maybe down here. The risk to reward isn't great because I'm only getting pretty much maybe one candle down and then I bounce back up because I expect buyers to step up. Now, if buyers didn't step up, then that put would have made more money as we broke down, but the risk to reward wasn't worth it to short so late in the game, especially after a gap down. Like I said, ideally, I was waiting for a gap fill, right? We go back up to fill the gap, and then a rejection. A lot of times, gap fills will be used as depending on if it's a gap up or a gap down. And in this scenario, was a gap down. When we fill that gap, it tends to act as resistance, and you'll see people start to, try to short it again once it hits that gap fill. And on the upside, if we were gapping up, you'd see the gap up, and then you see the price actually start coming back down to fill that gap. Then once that gap got filled on the upside, you'd see them look to support it and bounce it back up. Those are just two scenarios that tends to happen when we have gap ups or gap downs. But I don't really like to short gap downs. That's just one of my rules that I tend to go by, and it saved me a lot. So, the market did open here. We came down to this 404 level. Now I want to zoom in on this. All right. So, as you can see on this chart, there's no moving averages. I just wanted to give a different look. A lot of times I talk about using moving averages, and as a beginner, I always tell people to use those moving averages as a guide. But as we get more seasoned and advanced in this trading game, I do want us to start just paying more attention to the price action. A lot of times that price action will give you an idea of where we're going without any use of any other indicators. Just using the candles, right? If we can understand these candles, we can also understand the mechanism of the stock market and how things move. We're able to use those to our advantages. And the more time we have in the market, the more we can see these types of moves and know what may happen. So here, if I zoom, well, this was that breakdown that morning. And here, this is just nothing but VWAPs. I have, the VWAP here, the pink one, the yellow, and then this red one here. That's all in my studies. You can just, if you use TOS, you can just go and look up the VWAP indicator, and it will bring it up on your chart. And I also use Webull as well, and they have a VWAP as well. But I like TOS. I like to keep my TOS charts clean because on my Webull charts, I have a lot of levels and support and resistances, and Sometimes it can be a lot to look at. So on my TOS, I like to keep it clean. I don't have many resistance and support levels drawn on here. This is mainly used just for like price action and the volume profiles and stuff like that. So basically on this chart, I just have the VWAP and the volume profile. So you can see pretty much here when we did start to get a bounce, and this is on a 5-minute chart, by the way, right now, but I usually start on a 5-minute and then probably within an hour of the day, I'll move to the 10-minute just because it's a cleaner look. And I'm able to buy pullback and find opportunities to buy into a trend when I have those large time frames on, because it gives you just that bigger picture of what's going on. But like I said, I do use smaller time frames still. It's just sometimes you want to get that bigger picture, so going to the larger time frames does help. But on this 5-minute chart here, we can see as we opened up and we had that gap down and we started selling down right at this VWAP, we started to bounce. Not to mention this was my 404 level. You can see right here on this beige color line here where I have my support level drawn. So support levels aren't like be all say all. That's not to say that price isn't going to move below them. What I should have done is, instead of just drawing this singular line, I should have drawn like a supply area. So I talk about supply and demand a lot. That'd have been the demand area, but demand is pretty much just a support, and then supply is a resistance. But there's two other terms that you can use with that. But what I should have done is kind of just drawn this rectangle here. Because you can see these wicks, and anytime you see wicks, you want to start thinking, okay, there's a battle here. We got wicks going on. So for instance, here you have these two bottom wicks, right? So that's just telling you they sold this down. I mean, even though this was still a sell candle, but when they got down here, buyers stepped up, because you can see that wick. Same thing here. This candle started off as a red candle, but then pushed up because we had this wick here and it closed green. Okay, so that was your first 5-minute candle since pretty much open. That was a green candle, and it just happened to come around this VWAP area and around my support area. So if let's say that was this was the start of the day, and this is how you want to, go about just planning your day, right? I knew these levels already because this is SPY, I trade it all the time. And you learn certain areas and certain levels where you expect things to at least bounce temporarily, or you expect things to sell off temporarily. That's not to say that it won't break through, but at the same time, like I was saying earlier about the bears and the bulls, there's always a battle. So you want to know where the battle's really going to take, really take off at, right? So here, this is the battle, right? So you're seeing these wicks, and if if you're in a put position here, you want to be careful here when you start to see these wicks at the bottom here, because that could be an early sign, okay, that the bears may be getting tired and now the bulls are stepping up. So let's see. Get big B in here. All right. Let's see. So now, let's say this was my support level, right? You'll see multiple times throughout this day. 1, 2, 3 times. This is 3 times within the first 3 hours where this area, what's the blue cloud? This is a volume profile. So I really haven't discussed volume profiles in the past. It's something new that I've been using for the past couple of months, just trying to test things out. But I think it can be beneficial for you to use. And I mainly only use this for futures like ES, which is SPY futures pretty much. they are very similar. SPY maybe when SPY is at 404, ES is usually around, like right now, ES would be at, let's see, well, that's when, so 1 second. So this is ES. This is something that I would say, even when the market's closed, you can watch ES, because the futures market, is pretty much a day-long market, really rarely closes. You have little, I think, time between, um, nighttime, but a lot of people still trade, throughout the night. But you can watch the price action throughout the day, um, on SPY or whatnot. But let's say during the nighttime, you just want to watch some price action because, more experience, the more you watch it, the more experience you get. You can just watch ES and learn how the price action works. But the main reason for the volume profile is just if you can see like where it's furthest out here, like these ledges, this is where there's a lot of buyers or sellers at. That's all that's telling you. So you got a lot here, you got a good bit here in this area, and then it gets smaller, right? So it's not as much volume, I should say. That's because this is all it is. When we're trading, that's all it is volume. Buy volume, sell volume, right? So you get the bigger moves where there's the most volume at. So you have, little, for now I'll call them ledges, but there's another term for them. But you see these little ledges. This is where there's, some volume at. Here, there's more volume here than here. There's more volume here than here. Here, there's more volume here than anywhere else throughout this day's session. So this is a very important level. This 405, 24 level. As you can see, it's this ledge pretty much is all the way out here. Not to mention that it lines up right with where my VWAP is. That pink line there, straight line, that's my VWAP. So VWAP is always, pretty much where a lot of volume is, the most volume for that session. Just like I use VWAP on my Webull, and it showed you where you would expect buyers to step up or where you expect sellers to step up. So as a pivot, you'd want to use this, this level. If you're watching throughout the day, this would be your good pivot level because you say, okay, well, if we're above here, it's probably a good idea to stay long because buyers are stepping up here to hold it above. And if we go lower, then they're losing that area because all this is pretty much a point of control where, the most action is going on throughout the day. Bears bears will want to keep it below this and bulls will want to keep it above it. But, if I even take this off, you can still use just the candles kind of to give you an idea of where we're going because, like I was saying, we had multiple instances on Friday, 1, 2, 3, right? Where this level held up, this 404 level. And like I was saying earlier, it's not to say that it's going to be exactly that level. It can be a couple cents below, a couple cents above, because you want to think about the market like a shopping store or something, right? The people who are in the market, we're not looking to pay full price. We want to get a little discount, right? So a lot of times here as well, you'll have people who have their stop losses, right? And the market knows when people have their stop losses because the market's in business with these same brokers that we use, right? So sometimes if you have a stop loss right here, you say, oh, if it breaks its VWAP, I'm out. And you don't give yourself a little leeway. A lot of times they'll just go down there, grab your stop loss, you'll stop out, and then it'll bounce. And you'll be like, wow, I was a couple cents off and then it bounced. It happens with us all, right? We get stopped out and then the trade goes in our favor, but Now we got stopped out. It happens all the time. But when you can think about it like this and you say, okay, well, boom, they're breaking this level. Let's see if this is truly a break, because if there is a break and this was actually going to close below and go lower, then everybody would be ready for that. All the traders that were trading on this Friday would have been like, okay, it's put time because we're breaking lower. And it didn't hold, right? But, throughout the day Friday, I continued to stay long. I just didn't want to go short yet, because this was a very strong level. Multiple times it held up here, one, held up here, two, held up here, three, right? So in my mind, I'm looking like, well, wow, this level's holding up every time, right? Every time we look to see if it's going to break lower, it does. And it holds up, and then it bounces, right? So as a trader, as a scalper, we can say, okay, well, maybe we missed this, right? Maybe we missed this first move. And nothing's wrong with that, right? Because we have a lot of hours in the day where we can make a trade, right? The most important thing about being a trader is 80% of the time is us waiting. 80% of the time is going to be us just waiting for the trade to happen, or waiting for the trade to come to our place where we're comfortable taking a trade, right? The other 20%, it will be the execution of it, and knowing the risk management, and knowing when to take profit, and cutting the losses, whatever, right? That's the 20%, but the 80% is just the patience. So let's say we missed this trade, right? We said, man, we weren't comfortable. So we waited, right? It bounced, came back up here. What do we start seeing? Long wicks. Again, when we start seeing those wicks, we need to start thinking, okay, that's a lot of sell pressure, because that's a long wick, right? Not only that, that's a bearish candle, right? Because that means, all this candle means is the buyers tried to take this up here, right? Now, if this candle had closed green, it was a full green candle without this long wick, that would have been great for the bulls. But we got wicks instead, long wicks. So because of that, that's a lot of sell pressure, and we ended up going back down, right? Now, when we think about price action and candles, or movement in stocks, we always remember, right? Nothing just moves straight up. Even if the goal or the ultimate move is to the upside for that stock, it's not just going to go straight up. It's going to go up. It's going to pull back. It's going to go up some more, right? It could pull back, right? Because stocks move like a zigzag, like up, down a little bit, up more, down a little bit, up more, right? Or it goes, if we're going downwards, it goes down, right? Up some more, down some more, up a little bit, down. It's like that. We don't ever see it just go straight up or straight down. So here we have, within the first hour of the day, right? And I always say, if you want to be super patient and just wait for, the most confirmation, wait the first hour of the day out. Wait the first hour of the day out. Let the market tell you what type of day it's going to be, right? Because, when the market opens, we don't know if it's going to be a trend day up. We have an idea, but we don't know, right? So the first hour, we don't know if it's going to be a trend day up or uptrend day. We don't know if it's going to be a downtrend day. We don't know if it's going to be chop, right? Meaning chop is just, not really moving anywhere, just sideways action. We don't know if it's going to be a balanced day. A balanced day is like this, right? This was a balanced day, kind of just, you 406, 56 on SPY, down to 404, back up to 406, down to 404, right? Back up to 40, pretty much 406, 404 again, back up to 406, and then we finally broke up higher to 407, right? But that is a balanced day. And on the regular, we're going to see more balanced days than we see trend days. Okay, because ultimately, even on bigger time frames, we don't see the market just go straight up for days. It might be on a nice trend, But even then, it's going to have some pullbacks, right? So when we look at price action, we have to remember that. So when we see these big moves up, like boom, 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 nice, 4 green candles here, we got to start thinking, okay, a pullback may be imminent, right? So if I'm in a position, I need to start going ahead and scaling out, right? Or if I'm not in a position, I'm waiting, wait for the opportunity. Like right here, when we saw these wicks, that sell pressure, okay. So even when we saw this candle here, it went a little lower, but it didn't break. It's still above, my point of control. But at the same time, if I'm a bear, I'm starting to like these wicks. So let's say I saw this wick and I'm like, I'm still patient. Okay. Then we get here, we get a bounce, we get another green candle, and then it goes right back up here, and you start seeing wicking again happening. Okay. And this is on a 5-minute chart. I'm sure if I went to a 2-minute, you may be able to see it a little earlier. But at the same time, a 5-minute, I could wait, right? You start seeing these wicks again. So now that's telling you all up here in this area, every time we get up here, we did it in the morning at 9:35, we did it again at 10:20, we did it again at 10:35. That's 3 times up here where that's a lot of wicks. When you start seeing wicks, you start having to be cautious. Because as a bull, I don't want to see these wicks because that's telling me the sellers are here, their sell pressure here, and they're pushing the stocks back down or pushing SPY back down, right? Same thing on the downside here. When we got down here, what do we start seeing? Wicks. Wick, one of my favorite candles right here. That's a hammer candle. You see that, you should already start thinking, especially on a larger time frame, on a 5-minute. Oh, that's a nice candle there. Boom. That's an upside candle. My probability of going higher here is pretty high, right? Because that's what this candle tells you, right? Just like this candle is a candle telling you a reversal is coming, possible, right? And it did, right? It didn't just come. It could have just came right here and then started flooding down, but it didn't. They bounced it back up a little bit, protect the buyers still just protecting it. Tried again, wicked it down. Now, what they do? They came back with a big red candle right behind it, right? So if you were waiting for an opportunity after the first hour, you got this opportunity here to sell down. And guess what? It was also right here at the top of my VWAP, right? This is without any moving averages on here. This is just strictly candles, a little bit of volume profile for what it is, and use VWAP, right? Because if you get above the VWAP, then you could expect higher, but at the same time, I want us to start thinking about the market like this. Instead of us saying, okay, we're at resistance, because there's different types of traders. You have the traders who buy at support and sell at resistance, right? As you should. If you have a support level and you start seeing a candle that's forming at your support level, you should want to buy that. And then if you're at resistance and you see a candle that is looking like a sell candle, you should want to sell that. That's the game right there, right? Buy here, sell here. Buy here, hopefully you would have tried to get up here. It didn't. You could have probably still sold for a little profit down here before it came back down. Once again, buy here. What did it do? It ended up trending up, right? And did it just go straight up here? No, it bounced here, trend went up, went up, went up, boom. Do I like that candle there? No, I don't. So if I was in a position, I'd probably sell some, right? But at the same time, I would probably sell most. But if I wanted to, let's say I had a runner or something, and I still think, okay, well, we're holding this area here. I still think we could see higher, right? Then you could leave one because did we ever break lower than the level or this candle that we bought at? If let's say we didn't buy at this candle, I would have bought this one, right? What's my stop loss? My stop loss is pretty much probably under 404. And if we get stopped out, it is what it is. But at the same time, I'm buying this because every time we bounce, right? It's a probability game. So if I see something happening over and over again within a session, and we're already seeing that this session is looking like a balanced session after an hour, because we're not trending in one direction or another, we're just down, up, down. So in my mind, I'm already thinking, okay, it's a balanced day. So we're just gonna be up and then down, and then up and then down. Then I'm gonna be buying supports and I'm gonna be selling resistance, right? And I'm sure if I go and I'll go to my Webull afterwards, I'm sure they matched up right with where my levels are drawn. Because that 407 level was a huge level. And every time we would get here, they would sell it down. Every single time. Every single time. So, this is just using strictly candles, right? VWAP, and, you're not even having to use the volume profile for this, because I don't really use volume profile for SPY. I mean, you can. I just mainly use it for futures, just because I'm watching it all throughout the day, all throughout the night. And then, when I wake up or whatever that morning, I can use the futures levels to give me an idea of where we're selling from, where buyers are stepping up. And I can write those down and have an idea of how the day may go, because I can use those same levels. All right. Let's say in pre-markets, and we can use the same thing on SPY. Let's say in pre-market, SPY got up to 408 and, it never went back to that level throughout the day. You still would have that level, because if it got up there, you would want to see how it reacted to that level. Because there's a reason that stocks go up to a certain level and then sell off. There's a reason that stocks go down to a certain level and then buy up, right? Because at the end of the day, there's people out there with money, and they're ready to buy at a certain point. They're looking for a deal. So, they may say, ooh, yeah, I'll take SPY down here at 404 and I'll sell it up here at 407, right? And they'll do that all day, right? Until it doesn't work. But we want to be those people and not the people who are, oh, SPY look like it's about to break out. Now we want to buy it. No, we don't want to do that, because now you got to think about it. What if, we watch this whole move happen, right? Then it gets up here and we're like, okay, SPY is at 407 now. And it's, 407 is a tough resistance, but it looks like it's about to break out. Now I want to go buy calls. Well, you didn't miss this whole move here. And not only that, those calls that you're about to buy are already higher at premium, have higher premiums because of what? Because the stock's already moved up 3 points. So you're late to the game, right? If you didn't buy here, no need to buy here, right? Especially not at the end of the day. And now, instead, I would be looking for, okay, well, let's see if an opportunity to short comes. I just buying a short and buy one, or buying a put and buy one. I'm waiting. But why would I be interested in this level? Is because, well, this 407 level has been tough, multiple times throughout the day. But now we're trying to break above it, right? But then you see a candle like this, right? And if I said one of these candles right here is one of my favorite candles for bullish sentiment, and I see this candle, and it's not the cleanest inverted hammer, right? But that's a lot of sell pressure there, because this candle went all the way up here. The buyers took it all the way up here to 407.5, but then the sellers came in and said, nope, boom, we're going to close this candle at 407 or something. So that's going to give me a little call. I would take caution here. Now I'm seeing some selling pressure here. It's not my first time seeing it in this area, right? And then what did we end up doing? Yeah, you got this candle here that they bought it back up. But guess what? They never went above this candle. For the rest of the day, that candle was not touched above, right? So the sellers are still winning up here. And what did we do? We came up here, got a green candle, looked like we were going a little higher, then we started selling off. And these candles aren't the prettiest, so I'm not going to say that you should, you would know that it's about to sell off. But at the same time, you've had an idea, because this candle right here popped up. and we never broke it. Now, if we would have broke above it, I would say, okay, well, it negated this candle. This candle doesn't matter anymore, but we never broke above it. So this is a cautious candle for me. If I'm day trading and if I'm in calls, I'm looking here like, okay, maybe this is my time to get out of it, right? Or if I'm not in calls, okay, well, maybe I can get me a nice little put for the end of the day. Because I mean, from here, and I think I said something in Discord that this would be a good place to short, but it went from 4075 to 4065. That's a whole point on SPY within 25 minutes, right? That's a point. That's in for a day trade, that's great money. If you caught it at the right time, or even if you bought tomorrow the next day's contract, you still, that's still a nice 20%, 30% move on contracts quick in 25 minutes without you really having to think too hard, right? Okay, well, this is my stop loss. Boom, okay. Boom. And where did it come down? Right here to, this volume profile and to my, this 406 level, right? And yeah, you see candles below it, but like I didn't mention this earlier, but the market likes liquidity. So the market will go and say, oh, okay, all these people are waiting for this stock, for a SPY to make a new low so they can buy puts. But we're gonna fake them out. We're gonna go lower, and then the buyers gonna step up and take it back up, and the people who bought puts down here are gonna get cooked. Right? We're not gonna be those people. We're not gonna be those people that buy puts down here when it breaks support. We'd have been the people who bought puts up here and looked to sell down here and maybe had a runner just in case it broke. Right? Two different types of risk reward. Right? The risk reward buying calls up here, not good. The risk reward buying calls down here is good. The risk reward buying puts up here, good. The risk reward buying puts down here, not as good. Especially not on a day where we're balancing and not really going up or down. We're just kind of, chopping along, chopping those premiums, and then boom, right? And during these days, you might want to buy extra day because we're not just giving a consistent trend up, right? Now, if I go to another day where we did have a trend up, if I can find one. Well, before we do that, let's go back to this since we're on it. All right, so that's one way, that you can, understand your risk reward when you're day trading, right? Because what I'm noticing in the market now is, due to the market allowing more zero-day DTE contracts, meaning that we're able to day trade same day expirations 5 days out of the week. Because just 3 years ago we could only do it every 2 days. It was Monday, Wednesday, Friday on the contracts. Now we're getting Monday, Tuesday, Wednesday, Thursday, and Friday. Because of that, we're seeing more volatility in the market, right? So we're seeing nice moves down, nice moves up, intraday, right? So those same positions that we used to like to swing for, you can get those in the day. It's just you have to be careful when you're buying and when you're selling, or when you're buying calls or when you're buying puts. Because, like I was saying earlier, you don't want to be the person trying to, oh, I'm going to buy puts now because we're breaking down. If I'm late to the party, I'll just wait for the next party. And that's how we got to think, right? I want to be in with lower risk for the upside, right? I'd rather pay 40 cents, 50 cents, $1 for a contract with an upside of $2 or $3 than to buy a breakout and then the calls be $2, $3, and my upside is only $3.30, $3.50. Because now I'm spending too much money for not enough reward, right? That's why I was saying, right now I'm in some longer positions, right? But I'm getting cheaper contract, and yeah, they might not be worth as much right now, but when the move happens, then guess what? My risk reward has raised, right? Because now, hey, I'm buying a contract 40 cents, 50 cents when just 2 months ago, 3 months ago, that contract may have been to $2, $3, right? Same thing with options and intraday trading, right? Another thing you can do is, if you're on TOS or even Webull, look at the contracts or the contracts you're looking at trading. Let's say, you're here, you're planning your day, you see how the market's going, and you say, okay, well, we're trading between 407 and 404 a day. So what contracts should I be looking at? I should be looking at SPY 404s and 407s, right? Maybe 407, when we're down here, maybe you're looking at 4 or 406. Let's say 406 is for closer, to be closer to the money. So let's say you're down here at 404, and let's say you didn't buy yet, but we got back down here. And you say, okay, well, I'm gonna get some 406 calls down here. Why? Because we've been balancing, and every time we get here, we balance and we go to 406, and then we sell it around 406, right? And then when we start seeing these candles that's looking bearish and we sell out, okay, well, I'm up $50 for the day. I don't want to give all my profit back, but let's say, but I'm seeing this trend. So, okay, let me grab a 404 put now because we're starting to see some bearish candles. We're rejecting here. And maybe I already, made $50. So I'm profitable $50. I'll use 40 of it to get a put or whatever. And then it goes down. Now you're making profits off your profits, but at the same time, you're doing it the right way because you're buying here, selling here, buying here, selling here, instead of trying to sell here, buying puts here, or trying to buy here, buying calls here, and also with these types of markets, you can use VIX. I talk about UVXY, talk about VIX. You can't use these all the times, but during these times where we have so much volatility in the market, we have Fed speakers popping up every other day. We have numbers coming out, CPI, PPI, unemployment numbers, all these things that's coming out throughout the week. Some of them come out throughout the day, right? EIA numbers, oil numbers come out 10:30 on Wednesdays, right? You start knowing these numbers and these events. So you can just pay attention to the VIX to see how the fare is. VIX is kind of, going to give you the implied volatility of the market. So if VIX is going up, that means more people are hedging, more people are buying puts. They're nervous or something. If you're hedging, the reason why you hedge is because you want to cover something that may come and bring the market down. You want to make sure you're protected on that downside, because if I have a large, amount of call positions or long positions where I have shares of something, but I think the market may be starting to come down or may pull back because of new data, stuff like that. Well, maybe I want to hedge. And these bigger players, they hedge all the time, right? So, and nowadays, because of all these zero DTA contracts and stuff like that, they're having to hedge a little more because there's so much volatility happening with people buying these intraday contracts, buying these SPY contracts expiring the same day. So many people doing that now that, it's increasing the volatility of the market. So because of that, these bigger players are having to hedge more. So let's look right here. This is Friday. This is Friday VIX. Don't worry about this stuff. Just look at the candles. So if we're looking here, and we'll put these both on 5 minutes. These are both 5-minute charts. Okay, this chart is a 5 minute. This chart is a 5 minute. And I'm going to take this volume profile off real quick so it doesn't distract. I don't want to move it and then come back. Okay, now just move it down. Okay, so these two charts look, fairly similar, but This is another trick you can use when you're intraday trading. Pay attention to the VIX. The VIX at 9:30, what did the VIX do? Go up. Then got up to 950, it hit a high. Then we got a bearish engulfing candle here, and we started selling off some, right, on the VIX. So the VIX made its high at 950. Time to SPY make its low. SPY made its low at 950. Okay. Well, it made its low at 955. VIX made its high at 950. SPY made its high low at 955. Now, when VIX started to roll over and started to sell down, SPY starts to bounce. Okay, so if you saw this bearish engulfing candle here at 955 forming on VIX, you'd be more comfortable to buy calls for a move up or a bounce in the market because VIX is starting to sell. These two you want to be inverse. If the market's going up, if you see SPY going up, you want to see VIX going down. If you see VIX going up, you want to see SPY going down. If you see them both going in the same direction, you should start to take caution because they should be working against each other and not together. If they're both going in the same direction, one of them is lying. You should always know that. So which one is it? You got to figure that out. But if I was in positions, I'd be, a little careful there because I'm like, okay, well, why, VIX is up 5% today and SPY is up 2% today. Might be time for me to, maybe it's time for me to hedge because something, I don't know what's going on. People are buying hedges because VIX is going up, but the market's not, just like right now, right? VIX went from 18, it's at 21 or 20 right now, but it went up to 21. And when that happened, we started to sell some. So you can use it intraday, you can use it on larger time frames, but it's good to have in your tool case because all in the market is about probability. We want to see, things that we've noticed before that we made money on. We want to take heed to those, take note to that so that we can use that to our advantage next time, right? The more time you spend in the market, the more experience you gain, the more things you see, the more things you understand and how you understand their outcomes because of it, right? So you saw the VIX break down, SPY started to bounce. We get one of my favorite candles again right here on VIX, and I'm gonna zoom in on it. Right here, got hammer. When you see that candle, what do you probably think is gonna happen behind it? Probably gonna be another buy candle behind it because that's a bullish candle. So at 10:35, we got a hammer candle. Wonder what happened at 10:35 on SPY. Oh, started selling. No coincidence there, right? Another key to understanding the market because what if VIX was still going down, 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 like right here, matter of fact, 10:20, we had this candle here, which was a decent bullish candle for VIX. Started to see a little sell here on SPY. But what followed behind it? An indecision candle at 9:25. So it didn't give you that confirmation yet that we were going to move higher because you didn't get that follow-through candle. This is an indecision candle. That's a doji. And what do we get right behind it? Really, we didn't really get too much sell, right? And then we got another red candle. So it's like, oh, the VIX still weak. And the buyer stepped back up on SPY. But then when we got this candle here and we got follow through, we got follow through on the sell. And VIX went from 20 back to 21 between 10:35 and 11. And at between 10:35 and 11, SPY went from highs to lows. So hand in hand, you get you hints by looking at the VIX, right? Now, also using that, let's say, for instance, say this was the low of the day here, then, and this was the 404.18, Okay, and then here at 11:30, we made a new low, a 4412. So we made our first low of the day at 9:55. We made our second one at 11:30. I go to 9:55. Yeah, spot. VIX did make a new high here, but then at 11:30, did it make a new high again? No, VIX did not. So SPY was making a new low. VIX wasn't making a new high. So as a person that's looking at the market and thinking, oh, I see the market selling, right? Because that, it's easy right now to say, oh, what we would have did, but when the market was happening, right, you have to use these clues, right? Because I wanted to short really bad Friday. Like it was when I woke up Friday, I was like, okay, it looks like it's gonna be a down day. I'm already thinking about looking at NVIDIA puts and all these other puts that had in mind. But a lot of those moves had already happened in the pre-market, meaning premiums already went up. I felt like I'd be chasing, right? Boom, as well as I don't want to short gap downs, part of my rules. So it's a lot of things going not in my favor at that point, and it's changing my plan up. So I said, okay, well, I'll just be patient, right? I'll just wait for opportunity. I said, if the gap gets filled, then I'll look to short. If it doesn't, I'm gonna kind of wait, see how the market does. I don't want to go shorting down here, right? I don't want to be shorting down here and get caught up, right? So I waited. And then you see that VIX didn't make a new high when SPY made a new low. So that's a divergence in my opinion, meaning, okay, why is SPY making a new low if VIX isn't making a new high? So in my mind, I'm thinking, okay, well, that's a false low. That's not that's fake in my opinion, because I'm not getting the confirmation over here. So I think at that time I was like, I'm not comfortable short here. I went short here. And right after that, we started seeing SPY bounce, right? Once again, one of my favorite candles, bounce, boom, boom, boom. Okay, got to at least here, came back down, and then bounced again. Now, that happened here, and then again, here, SPY made a new low at 1250. Let's go over the VIX. Did VIX make a new high at 1250? No, it didn't. So once again, we got two false positives that this thing was going lower. So once again, I mean, if it ain't broke, don't fix it. Bounce once, boom. Bounce twice, boom. We're here again. VIX isn't making a new high. What do you think I'm gonna do? I'm gonna stay long. If I'm not in position, I might try some SPY calls here and make, put my stop loss probably a little bit down here, but I'm buying probably the next day's contract so that I have more leeway. I don't have to just get stopped out so quickly, because that happens, right? Especially with options, you get stopped out quickly. So maybe I won't. Maybe I'm used to buying 3 contracts. Maybe I'm just gonna buy 1. But at the same time, I'm gonna keep my stop loss a little looser, allow the play to happen, right? Because when we hit, let's say we bought here, boom, 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 and went up here, and then down here, you'd be like, oh no, I need to sell. But it never made a new low. This is a higher high, right? It's higher than this. So boom, and with price, right? We were talking about price action before. Nothing just goes straight up. So boom, we made him a nice 5 candle strong. Boom, 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 boom. You're going to get a pullback. Now what we want to see at the pullback is if the buyers are still going to step up, or if they're going to let this thing sell back down. They bought it back up. So they're not trying to go back lower right now, right? Just like this. They did it here again. Bought it, went up, boom, 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 5 candles. I mean, this is identical. I just looked at it. This is the identical setup. They did it over and over again. And this is algorithms, right? These are computers that's doing this. So you learn these, you start seeing these patterns. You're like, okay, I've seen it. 1, 2, 3, 4, 5. Rejected VWAP. Nice red candle sell. Buyer step up. We go higher. Sell again. Now we're back at square one. Boom, 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 boom. 5 candles again. Red sell candle, just like that one. What do? Buyer stepped up. Where do we go? We went higher again. Look where we rejected. Same place, right? That's price action. when you can know, all right, this happened previously in this area, it must be of interest. And be careful around here, boom, 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 okay. And even here, when they did sell it again, buyers never let another low happen. This is a higher high again. I mean, a higher low, higher low, higher low. That's bullish. Higher low, right? Because what do I mean by higher low? Because we went up. Then when we came back down, did we make a new low? No. We stayed here. Then we bounced, right? And we went up here. Some sellers stepped up, came back down here, but never went lower than these candles. So we went up higher. Boom, seller stepped up, came back down. Did we make a new low? Nope, stayed up, but this trend is still intact. Right? Then you get up here, and that's the ugly candle that I don't like. So I'm being even more cautious if I'm not already out of the position, right? And then what we get, you get over the VWAP, but then it don't stay over it, and we come right back below it. So all in all, that's a 3-point day on SPY. But if you knew what you were looking at, that's a good day. If you could have, there was so many opportunities that day that you could have, bought 404, sold 406, sold 406, bought 404, over and over again. Even if you didn't, at least one time, right? But that's just the price action. Instead of us looking like, oh, it's breaking out, now I want to get in. No. We don't. Because most of the time, that's what they want us to do. They want us to chase it, right? They want us to go and buy at full price instead of getting that deal. No, I want the deal. I'll take the deal. So I'll wait for it to come back down. And you can do the same thing with contracts. You can go and look at the contracts that you want to trade, right? Okay, well, we're in a range. So let me look at the 404P puts, and then the 407 or 406C, which is the call, right? And go look at those premiums. You can literally go and chart the contract, and you'll get to see, okay, that contract was at that low, that contract was at that high. So where do I not want to buy? I don't want to be buying the contract at a high. If anything, I want to try to get that contract at a low, right? I'm sure that 407 or 406C went from probably 40 cents down here to like 120 up here. It went from 120 up here back to 40 or maybe 30 by that time. The theta starts kicking a little bit. And I'm talking about a 0 day, right? But, all day you could have probably got these contracts very cheap down here and sold them to somebody chasing up here, whatever. And just by using, your candles, understanding what you're looking at, being patient, waiting the first hour so the market can tell you if we're going to be in a range day where we're just balanced, or if we're going to be in a strong uptrend day or a downtrend day. Because if we were in an uptrend day, right, then people would be looking to buy the dips. And you see a move up, then you see the pullback. And like we've been seeing pretty much all for the past 2 weeks or 3 weeks or whatever. We've been buying the dips, right? And then, on a downtrend day, people would have been looking to buy the rips. Sell the rips, right? Selling the rips mean you see this rip up, boom, 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 seller step up here. You sell that. So that means this is where you'd enter the puts, right? That's the mindset where we want to have that shift. That was a mistake that I was making early in my trading career, right? I'm looking to buy the breakout instead of, being there, before the breakout because I had my plan or I bought the support and I sold at the resistance, right? I played BA the other week. I've been talking about that breakout for a while. And, I had to hold it for 2 weeks, right? I was down on the position for a week and a half. And then it broke out, right? And the stock went from like 210 to 220, right? I bought around the 213 area. Ideally, I would have wanted to buy it around the 210 area where it was at that support, holding that flag, right? And you can do this on any time frame. It's not just, these are the same thoughts that you can have for larger time frames too, not just intraday. This is how you want to plan your things out. You don't want to be buying at the breakouts. You want to be selling at the breakouts, or selling majority at the breakouts, and then holding one just in case it does break out. Those types of things are how you manage your risk, but at the same time, you're able to still catch the move. What happened? Where is this for? It was a 4-hour flag. One of the cleanest 4-hour flags you're gonna see. No, it was a weekly flag. There we go. All right. The weekly flag right here. It's all you need to know right here. Oh, come on. All right. So if you can see that, I'm gonna zoom out a little bit. Why did I call this a flag? Bull flag. Huge weekly candle. Huge. This is the low was 192, the high was 213, right? Then what do we do for the next 1, 2, 3, 4, 5 weeks? We consolidated, right? How do I know we consolidated? Because we just traded sideways, literally 5 days straight, right? And then once we got over this high, which was 215.77, we broke out to 221. Now, did we stay there? No, we did not. Sellers still stepped up. But I was buying in this area, right? In this zone between, I didn't even go that low. I think my area was like 210. I was comfortable buying between 210 and 215. If we broke below 209, I just had to cut the position because then the flag would have been broken. But this is a full flag pattern. So when you get this pattern and then you get the consolidation, the longer the consolidation, the bigger the move, right? The longer you consolidate, sideways action, then boom, because the market doesn't just go straight up, right? So big move here. This is the move right here, right? You see this big move, the buyers are here because retail isn't moving this. This is these are big whales and hedge funds in there, right? So when you see a consolidation, right? And then you get the boom, right? You sell into the boom, right? Instead of people seeing, oh, BA broke out, it's over 220. Now they want to buy calls. No. I'm selling you my calls now because now my calls have doubled and you're about to pay 2 times what I paid for, right? So we're selling into that. And now if it would have went higher, I might have rolled up. Okay. I had a 230 call for like 317. Maybe I ought to use some of the profits and say, okay, well, I'll try a 230 for a shorter term or whatever, because I see it happening. And maybe, because they had room to 225, 230, and I still think it's going to get there. But at the time, I was just looking for the breakout, right? But same type of, idea, okay, right? When we made this big move up, just like we were talking about on the smaller time frames, we never made new lows. We just started trading sideways. So after this trading sideways, we determined a move's going to happen, and it happened up, but temporarily, even though you want more follow through, because if it did follow through, you can start aiming higher. Because what you would want is this breakout to happen, and then you'd want a candle like this to appear again up here. So it'd be like big candle here, consolidation, then another big candle, right? Just like this. If you put these two, this kind of is a trend up, but you put these two candles together, or put one of these candles together, and kind of do smaller candles, and then boom, bigger candle. Smaller candles, then boom, bigger candle. And that's not to say that VA won't do it. It just didn't follow through yet, but we still sold into the strength. Same thing as we were talking about on the smaller time frames, right? These are just purely candles. Purely candles. They're nothing else. Because I want us to learn and look at the market like this. I want us to just see the candles and understand what the candles are telling us, right? Just like here, you start seeing these types of wicks. You start being worrisome about VA, and then it goes down, right? Same thing here. You start seeing these types of wicks where we went higher. Never made a new low. We make a higher. Making higher lows, right? So higher lows is meaning the trend is up. Um, let's see what else did I want to talk about. Speaking of futures, let's go back to this shit. If you like, let's say you're just chilling at nighttime, because I know when the market's open, people are busy, or at the same time, people, are focused on what's going on throughout the day trading. But if you look at, futures throughout the nighttime, or even today while it's moving around like a snail, because it's not much volume today, but you still can watch the price action, see what you see on the price action, and chart out or have an idea of, okay, well, where would they sell it? If they were going to buy it, where would they be buying it, right? Because if I go and look at futures, let's go to, I usually look at 3 days. I like to put mine on 10 minutes. I like the 10-minute chart on futures. This looks cleaner, easier to understand. Let's turn this volume profile back on. Oh, I still gotta do something different. I can't remember how to fix it. I'll do it later. But like if you're watching futures, like this is today, right? We didn't really do much today, but this was the overnight session, right? This was all last night, right? This overnight session gives you an idea of where buyers are gonna step up and where they may not, right? This was the lows, still holding that VWAP the whole time. Highs still holding higher that VWAP the whole time. So we're just right now the range is the lows are 4073 and the highs are 4089. Okay. So going into tomorrow, those are your levels to watch for pivots to say, okay, well, for downside, I want us to cleanly break this low here, because if not, we're just gonna be in balance. And for upside, we're gonna have to break this high here, or we're gonna be in balance. And if we're in balance, then we're just gonna play the range. But if we don't, then we can, look for higher moves. But that's why I want to look for it tomorrow, just off of using, you can use this what happened today, what's happening today, range wise. Go ahead and have those range, typed out or written out. I like to write my stuff out. And then at the same time, right, you still use old data. It comes in handy, right? Here is an important area. Why? Because we had a double top form here. And if I zoom out, right, this double top was here. This area here was a buy area the day previous, right? So here, this level of support. Here, this level became resistance. And like I said, it's going to be a little cent above, because, liquidity grabs and stuff like that. The market will just go a little higher, fake you out, and then pull right back, or they'll get those people to buy at the top and then they'll sell it down, right? But you can see, right, this area here throughout this day was resistance. Couldn't get above it. Wiki, came down, right? Then we got accepted higher, went higher. The pullback where to come right down to this candle, to these candles, and then pull back up, right? So remember, price action, you got this impulse move up, boom, 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 boom. They got to pull back some. And where they going to pull back to this candle here that was the prior high. They want to see if it gets accepted. If they're going to, say, okay, this is cool, the price is cool, we're still cool with paying higher, and they were, and then they went higher, right? But then this next day, that same area, right? That prior in pre-market was, you know, was holding pretty much. It broke pre-market, right? Another gap down in pre-market. What did they do with that gap down? Gapped it up. Well, when the market opened, they went and tried to fill the gap, right? And in fact, when they found it, when it filled most of it, and then when we got to this level right here, that was prior support. Well, was resistant, became support, became a weak again, and what did they do at the same level? They sold it, right? So these levels aren't just like this market isn't just happening, like things aren't just happening out of nowhere, right? It's buyers and sellers. They step up in certain areas and we look for that. And we take advantage of that when it does come. Because here, it looked good, boom, 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 impulse up, came back down, came back up, same area. They can't get above it, double topping pretty much, and then sold down, right? Wicks, wicks, wick. When you see the wicks, that means buyers aren't comfortable buying up here. Again, the sellers are stepping up. It's like, wicks down here, sellers are getting weak. What do we do? Right? And wicks help you out a lot, especially when you see them at the bottoms and when you see them at the top. Especially if I see wicks here on green candles, I love that because those are bullish, those are gonna be some bullish candles, right? Like even this candle, people would be like, oh, too much. Here, right? This is a bullish candle. And we had sellers still stepping up a little bit, but what did we not do? We never made a new low. So we made a higher low and we ended up going higher, right? If I find a sell like this one, and we got that double top. Let's see if I can find another example of that. And there's no moving averages on here. There's no MACD on here. There's no RSI on here. This is strictly trading. This is strictly trading price action. But you will see, these are the areas that you want to take heed to when you see them happening in the pre-market. You can use these for, any chart, any stock. I just like to use ES because if I know what's going on in ES and I know it, then I pretty much know what's going to be going on in SPY, right? Because I'm seeing this stuff happening overnight. So when the market opens and SPY opens, I can match up the levels. And ES and SPY levels are not going to be matched up exactly, but if I see, okay, well, ES was at like here, ES was at, let's see, this was Friday, right? No, this was Thursday. So Thursday, at the end of the day, ES was at, on SPY, before the sell down, 412.91. So on this candle here, we were at 414.5. So about 2 points, 2.5 points difference. But at the same time, I can use these, because I'm saying, okay, all throughout that morning, SPY's high was and pre-market was here at 409.3. Then I'm going to look at SPY's pre-market and see what that high was for that pre-market. I'm going to mark that level. And when we get up to that level, I'm going to be looking to see if buyers step up or not. If they do, then okay, that level means that they're going to probably break that level and go higher. But if they don't, that's going to be my level to short because that was a pre-market level, that was a pre-market high where sellers continue to step up and sell it down, right? But there's a reason they're selling at these prices. It might be a big guy, somebody with a lot of money there at that price, and they're ready to sell every time, right? Or you might have a buyer that's a little lower that has a lot of volume and a lot of money they're really ready to put in the market. So you know, knowing these knowing these market levels early, so when the day happens, you'll know what levels to react to, um, and you won't be caught off guard or whatnot. So, I mean, that's pretty much, the ES and SPY and VIX correlation. Um, Now these, I did want to introduce this as well, but this is just clouds. You can use these clouds. I'll drop the link to how to find these clouds. But these clouds can help you to stay in trend if you're in a position and you don't know when to get out. I would use probably, you can use 2 minutes, you can use a 5 minute time frame, you can use the 10, but it'll help you stay in position. For instance, I think Tesla had a good strong move on Friday. And if you look here at these clouds here, you can see, so anytime the clouds are red or orange, you want to be, very cautious. But when they start turning green, that means that, the buyers are stepping up and that might be a good position to take on. But as you can see, you want to make sure you wait for the flip to happen. And what I would suggest is, you buy when they retrace to the green, not like when it gets far ahead. Like here, I wouldn't be buying here. I'd wait for a retrace. And as long as it stays in these clouds, then you can remain a buyer. But if it was a break lower here, like for instance, Tesla made a nice move up, right? And let's say you were in this position and you sold some here and you had a runner, even though it pulled back here, as long as it never broke below this cloud, you can stay in a position and it ended up going higher. Just like here that morning, right? We were under the clouds, got up, but never could flip the cloud. So it still was in the red here and it broke down and continued to break down, and went lower. And then it finally tried to get above it, still couldn't, because you never see the color change, and then it flipped. It's just something you can play around with. I like it just when I'm looking at trend and I want to, make sure that I'm not going against the trend. If I'm looking at, something that I may, be in for a day trade or even a swing trade, you want to pay attention to, how this trend is, and it can just kind of help you, go with the flow and not go against the trend. So I'll drop that link for this. Unfortunately, it is only on Thinkorswim. You can get it on TradingView too, but not Webull. But this is something that can help you stay in the trend of a stock that you're trading, whether it's SPY, Ford, AMD, whatever. And help you just know, okay, well, when we get in this area, if we don't break above it, this might be a good short area. But if you do break above it and this stuff goes green, then I'm not looking to short, and that you should be looking to stay with the trend. And if it pulls back, this may be a good opportunity here to buy again with lower risk to reward, with better risk to reward, because you're not buying up here, you're waiting for the pullback to enter and then make that move up, because this pullback here would have gave you a 4-point move in the last 30 minutes just because you waited for the pullback instead of chased up here. But this is going to be another busy week. I'll drop the calendar on what's going on this week. What else? Yeah, so this week I do want, everybody to try to, wait for that first hour to see how that balance, that first hour goes in the market. I think that'll help a lot of people understand what the trend may be, or understand what the day is going to look like, because we'll know if it's going to be a balanced day, trend up or trend down. even if the move happens in the first hour, pullbacks always or drawbacks always happen where you can find an entry. It's just that we have to continue to wait and be patient. Like I was saying earlier, 80% of trading is waiting. Also, use the one third strategy. Let's say you want a position of three of whatever you buy. Let's say you have a position of three you buy every time. Buy the first one with one contract, right? And then let's say you're in a swing position or something, or you have a nice trade idea. Start with that one contract, and you get to follow that contract with less risk on. And then if you see the opportunity where that stock is moving in your favor like you thought, then add a contract on, and move from there, because then you'll have those two contracts to kind of maneuver if you want to sell one, hold one, things like that. I love to buy at least two contracts just because I like to sell one early and then allow one to keep going. But you can do that with three as well. I know people who they'll buy, let's say they're in a swing position, they still have a plan no matter if it pulls back. They'll buy one contract here, they'll let it pull back some like 33% or something on the contract, and they may buy another one. I'm not big on buying dips or averaging down. It's rare that I do that, but buying just that one contract at first and then kind of building your position is a good way to not get hurt going oversized on position. Start early, start with one. Let that play out. If it goes in your favor, cool. Just take that profit and move on. But if it doesn't, at least you only have one. And then if it gives you a substantial pullback that you like, right, then you can add that extra contract on and help that drawdown that you had. So, um, that's what I've been doing lately. It's been helping a lot, especially with this choppy market, because it's allowing me to hold contracts a little longer. The risk to reward may still be there, but at the same time, with beta and things of that nature, stocks can pull back temporarily and stuff like that. So me buying less with a little more lenient stop loss, or give myself a little more space to move with the contractor and allow it to do its thing, has allowed me to let plays do their thing. Just like BA, right? If I would have went heavy on BA at first, I would have had to cut early because I was down, 30% at one point on the contract. But at the same time, I knew I had time. I knew what I was looking at. It never broke below my weekly plan. So I stayed in it, and I was able to actually buy one more at one of the lows, and then that helped me. So when the move happened up, I was already substantially in profit just because of, me waiting and buying one contract and then buying another one later on down the road when it was still a part of my plan and the stock hadn't broken down yet. It was just that, we were chopping around, and when you chop around, premiums get chopped up. So if you don't have a plan and you just say, "Oh, I'm out," then you would have been upset when the play did happen because you had the right position and you had to be patient. But other than that, I think that was it for today. You have any questions, Marvel? So yeah, just VIX and stuff of that nature. You start using VIX with your SPY, especially when it looks like we may start seeing some drawdown in the market. SPY, I do think we may have one more. Well, I'll just look at ES for this. So ES, I'm looking for a retest of 413 up here. If you look at my volume profile, this is a point of control over here. Right now, it's a lot of volume here. So I expect that they're going to try to hold this up here. We'll get back into that 410. 410 is going to be my first target on the upside. 410, 411 area on ES. Then after that, I'm going for the 413. And then 413, I'm probably going to start looking for shorts. I don't think we're gonna get through this level too easy. I think reject we're gonna reject some, probably pull it back down to this 4,100 level. But I want to get into puts here. I don't want to buy puts down here. I'd rather get up here and then try to enter some. I think it'd be better risk to reward there. But if we do break above this, then we're going back to 4155, 416. But I just see that this is gonna be a tough area. So this is my area for puts tomorrow and this week. Calls, as long as we hold this 406 level, I'm gonna stay bullish. If we break below this, we gotta if we break below 406, we're going to 404 and then 400. So downside is 406, 404, 400. Upside is 4088, 4100, and 413 on ES. And then if I'm looking at SPY, that would match up to 405, 405, let's say 406, 59, 404, and then 400 on that. Upside, I like 408, and I like 412, 411.33, 411.33, 408 level. I'm just gonna say 408 even. That's all my upside levels. And then downside, I like 405.79, 404.04, and below that, I'm pretty much aiming for 400 on SPY. But like I said, I'm really leaning more on upside before more downside. But I'm guessing here. But I just think we're gonna go and try at least to test that level again, because we broke through it. And like a lot of times when we break through levels, they want to go back up and test it to see, if it's going to get accepted or if they're going to deny it again. So I would expect, if we got back up to these levels again, that's where buyers are going to step back up to sell it back down. And that is where I would probably enter my puts for a month out. And I'm going to look to ride SPY from, this high 410s area to low 400s. And then after that, I'll look to exit my puts. But then I would expect another bounce. We have NVIDIA earnings this week. So that's going to be a big one. That's going to let us know a lot about these earnings, because some of these stocks and growth companies, like, they had very low, like, it was easy for them to pass their earnings, right? To beat their earnings. So what I'm thinking about with NVIDIA is, NVIDIA is like that honey in the market. Everybody loves NVIDIA, right? Just like everybody loves Tesla and stuff. NVIDIA has been on a crazy run. From, I think it touched the lows of like 100 in August or something, and now it's back up to like 220, 230. So ideally, I would look for NVIDIA to go back up to 230, hopefully before earnings. And if it does, I'm going to probably look for a short. If it sells off before earnings, then I don't know. I don't know if I'm going to touch it. I'd want it to go up before earnings, and then I could look for opportunity. But if it doesn't, then I probably won't touch it. Or I might play the ETF instead and just buy puts on that and stay away from just NVIDIA by itself. Because I do think, certain stocks like TSM, which is one of the semiconductors, could start seeing some decline due to this China and US issue with Taiwan. So it might be better just to play the ETF so we can get some exposure from the TSM when it does start to roll over. So that's something I'm thinking about this week. But I'm gonna be very particular on what I play this week. Like I might actually play more indexes this week compared to last week. Last week I didn't play many indexes because we were really just consolidating. Um, like we've been for the past couple of weeks in this range. But I think we could probably see a week. This week we either break out or the next week with FOMC. But whenever it does, there's going to be a nice range to play. So I'm going to wait for that. But other than that, I'm going to get up out of here. I will be posting this recording on YouTube once it's done. Um, it'll probably take about an hour or two. So let's just say look for it by at least 5 p.m. Eastern time, and it'll be up on the OBI on the OBI YouTube. And other than that, I'll drop the websites where you can get the clouds. I'll drop that in the group. I'll also drop the information for this weekly calendar in the group. And if I think about anything else, I'll also drop that in the group. But other than that, everybody have a good day, and let's get back to it tomorrow and have a good week. Have a good one.